Okay. Today is all about capital protection. Okay. All you do in trading, if you can't protect your capital, you are good as nothing. Right? So one of the things to look into or to know when um protecting your capital okay, so is just give me a moment. So one of the things to know is, first of all, what are you risking? Your risk to reward, right? Your risk to reward. So okay, today we'll be talking about your capital, right? So one of the things to look at is your risk to reward, right? Risk to reward. What are you risking? What are you aiming for? Okay. So let's say you want to take a buy at this moment. What are you looking at? Right? So let's look at this. You want to take a buy at this point, right? You want to tap into this area here. This looks like a very good area for you. Right. Are you risking 1:1, 1:2? What you are risking, the best, if you don't have any idea of what to aim at, keep it at 1:2. Okay? Keep it at 1:2. So the main thing is the market comes into this zone, you take your buy. Right? So for this particular trade, you're risking, this is good. You're risking like 46 points, 94 points. So with the least lot size, what you're risking here is like $46, $4, right? If that should be the case, right? Yeah, that should be the case. Okay, so this is determined, right? If it's too much, that means you have to go down to a lower time frame, get a get a better entry, right? Where you get to risk less, all right? So now, once you determine this, another approach you need to take is, let's say you are trading a proper account or even your normal account. How much of your account are you do you want to risk per trade? Is it 1%? Is it 3%, 2%, whatever it is? Now, one of the things to protect your capital, you can decide to risk 1% per trade. And in a day, you can decide to risk just 3% or 4, 5, 6 on your personal account. But if you're trading a proper account, you can decide to just risk 2% in a day and maybe 0.5 or 1% per trade. Okay? So that is all good thing about it. Okay. Next good thing is to there's what we call trailing stop loss, right? This is a situation whereby let's say, okay, let's use this for instance. You sold at this very point, you sold at this very point. Let's say you are so good that you got an entry at this very point, right? And your SL, let's say your TP, there's no TP, your TP is open. Your SL is above here. I'm gonna use red for the SL, right? Okay, entry is here. So the market made this move, right? Did a retrace, started going down again. What you're gonna do, you simply bring your SL in front of your entry, right? The market created on that low, you did a pullback, continue selling. You bring your SL to this former high. You keep doing this until the market gets to your target. Let's say your target is like down here. Your target is this, right? So the market kept buying. In fact, before the market Make creating a new low, did this. Then of course, this next level. Then boom, before you know it, market hit your TP. You can see how you've been. In fact, there's also what to call, okay, it's not available on MT5. If you use Match Trader to trade, yeah, there's an option to automatically show your trade. That's trading stop loss, automatic one, right? It's automatic on Match Trader. It's automatic on Match Trader, right? But for MT5, you have to manually do it. Okay. So that's it. So this is a way to show your stop loss. In fact, there's another approach where you can have whatever entry you want to do. Let's say you have like three targets or two targets, right? Let's say TP1, let's say TP1, TP2, TP3, right? You can do the same thing, right? You divide your entry into three places or your risk into three. You're going with three trades. First one, TP1, second one, TP2, the last one, TP3. Right? And once the first trade hits TP1, just adjust your stop loss to break even for both trades, right? Once second trade hits TP2, adjust your stop loss to TP1 for the only trade remaining. Boom, like that, you're good. All right, at least before the market hits your last TP, you already closed on two trades already. All right. So even if let's say the market decided to reverse on you after the first TP, you're you're closing at the break even for the two remaining trades and on profit for the first trade. All right. So that these are other methods you can use. Okay, when it comes to your risk management with a running trade. All right. Risk management with a running trade. I think to understand this better, you need an MT4, MT5 um interface. But I think I will personally make a video, right? That will help personally make a video that will help so you can understand it better. Okay. So another thing to look at is let's say maximizing your leverage and understanding your leverage as well. Right? Some brokers will give you unlimited leverage. One is to 2,000, one is to 3,000, one is to 1,000, right? That means what it means is that for let's say you have $100 account, right? The broker is in the $100 account as $100 times $1,000 is times 1,000 is call it 100K. Yes. So the broker is in there your $100 as okay, no, it's seen as a $10,000 account. So what a $10,000 account can do, that's what your $100 account can do, right? Just know with more leverage comes more risk. If you have more leverage, you have the capacity to risk greater part of your account, right? So that's why you can see a $100 account with some um crazy stop losses, sorry, crazy entries, you know, where you can easily flip the $100 into some amazing amounts, right? So that's it. Some brokers, in fact, for prop firms, some prop firms give you highest you can see in prop firms are like 1:100, right? So if your prop firm gives you, if you're trading a 10K account on a prop firm or a 100K account on a prop firm, and you're seeing 1:100, sometimes 1:15, sometimes 1:10, and that means multiply that your account by that number. If it's 1:100 and you're trading $100 account, multiply it by 10. That's like a 1 million account. That's leverage. If it's by 1:100, that's like a 10 million dollar account, right? So that's what leverage is. Leverage is how much trades you can take at a particular time. There are some that has unlimited leverage. That's like some see all these gurus online stacking, flipping $1 to 1 million. It's crazy. These guys will stack up, lose up trade. There's no ending. Keep buying, keep selling, keep. can see multiple entries, right? So that's what leverage is. Yeah. It has its pros and cons, right? The cons are like you can blow your account in a blink. There's no restriction. One of the pros is that you can, if you're lucky, you can flip your account fast enough, right? Some prof firms even cap, depending on the instrument you trade. If you trade commodities, um, like metals, right? Gold and silver, forex, right? They cap that to like 1.5. So you can see on a 5K or 10K account, you cannot risk more than you cannot risk more than 0.1 lot size, right? Highest 0.3. All you can do is only three entries of 0.1. So somehow it limits you in another way, it protects you. Because if you have all the leverage, you might even blow your account, right? So that's end of the day, at the end of the day, is your capital. That's the most important thing. All right. Protecting your capital at all cost. Protecting your capital at all cost. That's what it is. Protecting your capital at all cost. Right? And when it comes to this trading thingy, yeah, you also need to focus on a particular pair, right? Understand the pair, know how the pips count, know what you're risking, know what you're gaining, right? So I can tell that simply looking at this chart here, I can say that the market gets to my entry, right? I know I have, let's say I have $100 account, right? It's posing for something pips. It's not the best for me. But if I have $1,000 account, exposing for 46, is like almost 5% of the account. If it's my personal account, okay, that's what risk. I carry 5% on a personal on a trade on my personal account. Okay. The $100 account, no, this is too much, right? So the best thing you're gonna do in this particular case is to go down to a lower time frame, right? See a way to risk even less. Yes, but these days, gold moves. The movement of gold these days is crazy, right? So if it was before, you can have stop loss of like 5 pips, and the market will go well. But now, 5 pips is just like 0.5 pips, or points. Whatever the case is, market is so volatile now, so volatile now, right? So if you're trading gold on a very small account, just be careful, and if luck is on your side, you make crazy money, right? So that's it. That's the pro and con as well of it, right? That's the pro and con. Also. I believe I've shown you this. Now, when you have a healthy risk to reward, yeah, it's not about, see, in FX, there's nothing like, let's say, there's nothing like, it would be delusional of you. 100, sorry about that. 100% accuracy equals delusional. Right? You can be delusional to start aiming for 100% accuracy. That's not what they're looking for. Even with even with 50% accuracy, you're good, right? Can still be profitable with 50% accuracy. Right? And you're right. So let's break it down now so you can make more sense. Let's say you are risking this market is no longer coming to it has reflected that a bit, but that's not what you're looking at today. Let's say you're risking 1:2, right? 1:2. So for every $10 you risk, you're making $20, right? And in 10 trades, 1 5, you lost 5. Okay? 10 trades, in 10 trades, you had 5 wins, 5 wins, um, 5 losses, right? What does it mean? Right? You won 5, you lost 5. That's 50% accuracy, right? So for every, let's do a little calculation now. You're risking, you're let's say you're risking $100 per trade. You have a proper account, right? You're risking $100 per trade. Um, per trade, right? And your RR, it's 1:2. So for every $100, you're looking at 200, right? So your 5 wins give you 5 wins equals $1,000, right? Your 5 losses equals equals 500. So at the end of the day, at the end of the day, your P&L plus so in profit, right? So if all your 1:2 RR trades hits TP, plus 5 of them, you're up 500. If you lose 5, so assuming this is let's say you are trading a 5K account, right? $5 account, that a 5K prop account, right? And you're in a funded stage. You're already up 10% on that account. If it's a 10K account, you're already up 5%, right? If it's a if it's a 20K account, you're already up 2.5%. If I'm correct with that. Am I correct? Yeah, 2.5% on the account. Just with this, right? You can apply for a withdrawal, boom, with 50% accuracy. So how amazing that is. With 50% accuracy. All right. With 50%, with 50% accuracy. So if you're trying to chase 100% accuracy, you're almost delusional. In fact, you're saying that I'm way beyond or way above having losses in the market. I'm expected to be right 100% of the time. That can be you deceiving yourself as well, right? Because in these markets, wins and losses make the market what it is, right? In fact, the dangers of being on a long winning streak sometimes are more disastrous than having long losing streak. I tell you, right? I tell you. So that's one of the things to consider, right? So you can see with 50% accuracy, you're good, right? You're good with just 1:2, right? So if you're a kind of trader that risks 1:3 and all, the result here will be so different, right? In fact, we can do a clear breakdown of 1:3 RR so you can see where you're gonna be. Right? So I'm gonna let's do that. So it's not let's get that. You're risking 1:3 RR. So let's just get that one. Okay. 1:3 RR. All right. So 5 wins, um, risking risking $100 per trade. Just like we have here already, yeah. Risking $100 per trade, right? Your 5 wins, 5 wins are simply that's 300 times 5, 15, $1,500. Right? The 5 losses are simply 500, right? P and L, profit and loss index. Are you seeing that? Right? So this is if you can, right? If you can understand this, then you're good. You know that you don't need to. Yours, see, the only thing is once you see your setup, set your stop loss, set your TP, be gone, right? Just watch it play out. Watch it play out. If it doesn't go well, fine. On to the next, right? If it doesn't go well, fine. On to the next. Okay? If it doesn't go well, fine. On to the next, right? If it doesn't go well, on to the next. You don't need all of that. For real. You don't really need them. If it doesn't go well, good. On to the next, right? So that's one of the best ways to chase this market. Right now, now you can see how profitable you are, right? You can see how profitable you are with the right risk to reward, right? Understand your strategy, know what your strategy can give you. Me personally, I do 1:2 RR. Yeah, that's what serves me. Okay, that's what serves me. All right, that's what serves me. Okay, that's what serves me. And with that, I know I always get what I want, basically. Right? Do my analysis, get that. If it hits stop loss, fine. I look for another setup. If I'm not seeing any setup for the day, I head to the next day. You know, one thing about prop accounts will help you stay very, very, very disciplined. Like you make sure every trade counts. You don't just take anyhow trade. You don't take trade because you want to take trades. You take your journaling serious. That's one good thing prop account do for you. Right? They I think I'll call them a drilling camp, right? If it's something like that. They drill you, like you stretch yourself. Now you must be in the zone all the time. You can't afford not being in the zone to trade, take any trade. Yeah, you must. Your mind must be very, very sharp. Okay, you can't just carelessly stroll in. Oh, let's take one trade and all. No, you can do that, right? So, in fact, personally, I think anyone that passes a prop challenge and consistently gets a payout can comfortably, right? Manage his own personal funded account like well, right? The person will take any crazy risk. Just for a long term, you can give this person a $100 million dollar account to manage. He's going to manage it well because he has stayed through the walls of prop accounts, right? The test phase, past that, and has been getting consistent payouts over time. So that's like all we need, really, because it's not easy. If it's easy, go try it out. Go try it and come back with um, your email from the prop firms of your breached, rule this, rule that, rule this, rule that, right? It's not really easy. Yeah. But if you can do that, you're one of the best. That's just what it is. That's just what it is. Right? So that's it about that for this family, right? That's how all has to do with capital protection and risk management. At the end of the day, everything boils down to risk management. If your strategy is not right, risk management, how will you take multiple trades? You lack risk management. At the end of the day, no matter how you know, it all boils down to risk management. All right? It all boils down to risk management. So that's it for today, right? So cheers and all the best, family. We'll break this down more tomorrow. Right? Tomorrow we'll talk about, you know, some other trading styles. Okay? So cheers and have an amazing day. Right. Mhm.